Hi everyone, I'm Sam Fox, a mortgage expert in the UK, and today I thought I'd do something a little different, go online, find all the most commonly asked questions around buy-to-lets. Let's get into it. Okay, so first things first, simply, what is a buy-to-let mortgage? Now, a buy-to-let mortgage is the theory that you are buying a property to let it out for capital appreciation over the long term and a monthly income. It's not a property for you to go and move into. Next is, how is a buy-to-let mortgage different from a residential mortgage? Well, one of them you're going to live in the house, the other one you're going to rent it out to a person or a family or maybe multiple different people. So the residential mortgage is for you to live in, income is assessed differently, a buy-to-let is an investment, and the idea is that over a long period of time it's going to grow significantly in value and you'll have had a monthly income along the way as well. Can a first-time buyer get a buy-to-let mortgage? Put simply, they can. Now, sometimes they're assessed differently. A typical buy-to-let mortgage might be based on the potential rental income versus the loan that you're applying for against the tax bracket that you're on. Now, as a first-time buyer and a first-time landlord looking at a buy-to-let mortgage, you tend to find that lenders will assess your personal income to make sure if you have rental voids, your surplus income can cover that as well. So yes, you can if you're a first-time buyer. Not every lender does it, so you need to be clever where you're going. And before the next one, do me a massive favor. Can you like and subscribe on this channel? It does wonders for us. It helps more people interested in the world of mortgages find our content, and we know that 91% of you don't actually follow us. So do me a favor, hit like, hit subscribe, and I'll keep doing this sort of stuff. Number 4, do I need to own my own home to get a buy-to-let mortgage? Not necessarily. Now, like in the previous question, if you're a first-time buyer, you can potentially buy a buy-to-let. And likewise, if you did own a residential home, but life might have changed and you've sold that house and you're living in rented accommodation, you can still, without being an owner-occupier, buy a buy-to-let as well. But not every lender does that, so we do need to be careful who we apply to, and it might be some strict criteria around that and some hurdles we need to get over. But you don't have to be a current homeowner to purchase a buy-to-let. What is the minimum deposit required for a buy-to-let mortgage? Now, this is a good question because it can fluctuate. Now, as a rule of thumb, 25% of the purchase price is where most lenders, if not 90% of them, want you to be. Some lenders will want a 20% deposit, some of them might go to a 15% deposit, but it's important to note the lower the deposit, the higher interest rate you're going to get. So it might be quite costly on the interest rates, and your market of who the lenders will go at 15% deposit might be really small. So as a rule of thumb, 25% is where most lenders are at. Okay, next question, how much can I borrow with a buy-to-let mortgage? Well, this is dependent all on the rental income from the property, your tax status, and the interest cover ratio. So let's say, for example, your house is worth £100,000 and your rental might be £1,200, a lender might go all the way to 75% loan to value. But if your house is worth £100,000 and the rental income is only £500 per month, then based on that, the lenders might struggle to get you the maximum 75% loan to value. So the affordability is all based on the interest cover ratio with the loan amount and the rental. Are buy-to-let mortgages interest only or capital repayment? Well, that is your choice. So there's 2 ways to look at it. If you have a capital repayment mortgage, you're obviously going to be repaying the balance, so your mortgage payments are going to be slightly higher. If you have interest only, your mortgage payments are lower, which means you're going to make more on it per month. Now, this all depends on the style of investment you want to make. Some people want to have 10 buy-to-lets, all on interest only, so they can benefit from the residual income each month. Some people might want to have 10 buy-to-lets and be focused on chipping off that balance. So at the end of the term in 20 years, 25 years, it's guaranteed to be repaid, and you can either refinance them, you can sell them all, or just benefit from the maximum monthly income. So it all depends on your investment style and what your long-term objectives are, but in short, you can decide what it is. How long does it take to get a buy-to-let mortgage approved? Well, it's very similar to a residential. An application is submitted, support and information is verified, a valuation might be carried out. Now, the lender's valuation here is to understand the potential rental income. Now, that's where you might come a bit unstuck if the rental valuation is lower, it might reduce your loan to value, you might have to put a bigger deposit down, but the underwriting process and the time to get it approved is really similar to that of a residential. It might be an extra day or two in case you need to book in a physical survey and check the condition of the house, but a couple of days and you should be on your way. Next one, can I get a buy-to-let mortgage with a buy credit score? Well, really, you should do, but it depends on the severity. So like a residential mortgage, there are lenders that will look sensitively at poor credit. So if you've got missed loan payments or credit card payments, or you're overspending on a credit card, or you've got high debt to income ratio, there are lenders that might be all right with that. The reflection here is that you might pay more on the interest rate. So if we're going, especially for a non-high street lender, if it is severe adverse credit like defaults and CCJs, you can still get a mortgage, but it's just going to cost you more on the interest rate because lenders are looking at this from a risk basis and what's the risk of them having to repossess this at some point in the future. Once you've secured the mortgage, and if it is a higher interest rate with a lender who isn't on the high street, for example, at some point in the future when your credit score recovers, you can then look at your normal lenders as well. And that's all you're getting from me today. Now, if there's anything specifically you want to know when it comes to a buy-to-let mortgage, you know what to do. Drop a comment below and we'll make videos of them going forward on the channel. And I can't thank you enough for watching this. It does mean a lot. Like and subscribe, hit me up with any questions, or you can contact me direct. It's sam@ukmc.co.uk, and I'll see you next time.